Good morning, everyone. Richard here, and welcome to Wednesday's Ninjacators Morning Bell. Sorry, I'm a few seconds late. I've had some issues trying to stream to YouTube again, but that's been sorted out. Some gremlins as usual, technical gremlins. Guys, it's Wednesday, 31st of August, end of the month, start of a new month, September, tomorrow. Pretty insane how this year has flown by. And then we still have to deal with quite volatile trading environments as well. So we're going to obviously be looking at the charts again. During today's session, I actually want to drill into the ES quite a bit more. I did mention last week that, I want to, or we should also have in the back of our mind the alternative bearish count, or just to be planned for that in case it does happen. We obviously have our invalidation zones on the ES and the NQ price extremely close to breaking them for that bullish count that we've been talking about for a while. So if that does break, we definitely have to have a plan B, if I can say that. So we'll look at that in just a second. Firstly, on the economic calendar today, we have the ADP non-farm employment change figures that just came out. Was unexpected, although more emphasis is placed on Friday's job numbers. This just pre-leads or designed to mimic Friday's job numbers. So yeah, nothing happening tomorrow on the calendar except for the ISM manufacturing PMI. Guys, although the job numbers are the big ones, always on the first Friday of every month, unless it's a public holiday. They used to carry quite a lot of volatility with them, or cause a lot of volatility, should I say, but these days it still seems to be all about inflation, what the Fed's got planned, etc., etc. So, from last week's Jackson Hole's symposium that Fed Chair Powell made it pretty clear that they'll continue raising interest rates for as long as they see clear signs that it's taming inflation. So, when that's, as soon as he said that, the market tanked. Same thing with gold. Crude went up initially. Crude's been coming down now quite a bit. We're going to again look at crude. So I don't know. It might be a non-event on Friday with these job numbers. So we'll just have to wait and see. But anyway, that's it for the economic calendar. Let's quickly dive into the markets we're following. Right, guys, as always, the chat boxes are open here on Zoom if you're following us from that link, and as well on the live YouTube stream. So please do ask questions if you have, and then I'll be more than happy to answer them for you. Okay. Very quick recap. Decline Jan. It's center median line for long-term pitchfork. So I call them because I used anchor points going back quite a long time in history. To the T, reversed back up and found resistance again at the upper 50% DAS median line, this one over here. All right. Also had a pitchfork crossing to the upside, tracking this upward move that we've seen, and it was quite impulsive in nature. Price reached that center median line. We identified a potential zone where there was a confluence between different angled market geometry lines, and price declined from there. Another quick recap. Let me just put this snap mode off quick. We were saying that this was potentially one, an A, B, C, 2. This was potentially a third impulsive wave, and we said that we were then expecting a fourth wave. Now, we were hoping for obviously some sort of a zigzaggy behavior. We had a support zone around about these levels. I think it was about 4,100-ish. Price did get a little bit of bounce there, couldn't be sustained, and broke down there quite fast and aggressively. And obviously this was last week with the Jackson Hole symposium thing. Now, we were expecting another fifth wave to the upside. If this worked out, then that would have really sealed the deal for me that these lows here in June were in fact the end of a very large, aggressive, volatile correction. Now, we didn't get that last fifth move to the upside. It is possible that a third wave somehow ended here, a very tiny fourth wave, and that this was a fifth wave. But I don't think that's likely. I might be wrong. technically not impossible. But as I said before, I shouldn't have deleted that now. Hang on 1 second. If this was a 1, a 2, quite often your third wave is impulsive, right? You don't want to see your fourth wave pull into the area of your first wave, which was at 3,950 on the years. This previous highs here. Now, price has not during this strong decline reached that level yet, but came frightfully close to it. So it's really starting to question whether we're actually going to see another bounce to the upside. So technically, this could still be a fourth wave for as long as price doesn't break below here, but it just doesn't look like it's going to stay above there. And this shouldn't mark us A, B, C, D, E. It should be 1, 2, 3, 4, 5. I'm still working on a new tool for us for labeling. It's going to make things much better. This is a free little tool. See, it doesn't even want to watch 5 waves up. But anyway, you get the idea. I've shown you this before. So if we really have to zoom into this a little bit bigger, then you see for as long as price stays above the 3,950 level, this could technically still be a fourth wave. It could be a very strong A, a B, and a C. But admittedly, trying to, I'm going to say, so that we should try to get into trades here, it's just going to be very difficult for me to motivate that. It's just, feeling like we're stepping in front of a falling knife here. Very, very strong decline. I mean, even when price tested the center median line, it came down and nearly tested this 50% dash median line. It gapped lower below this median line, where we also had that previous zone where we thought price might bounce higher for a fifth wave. Didn't happen. Price moved down. It retested. This is what we call a kiss goodbye. And we had a strong decline yesterday again. So, a bit unsure what to make of it. But it is what it is. We just have to look at the technical levels here. See, even this undershoot here, price extended a little bit lower than that previous undershoot from a parallel median line perspective. So, yeah. And this is why I said I want to spend a bit more time today on the ES. If this gets broke, today, tomorrow, this week, next week, whatever the case might be, we just have to really be careful that any sort of pullback could just be a lower high that forms with another decline to follow. Price being so close to these levels now, we should know if this bullish count is going to be invalidated sooner rather than later, if that makes sense. So, difficult one. And that brings me to the point I want to make with we have to prep in case we are actually, in fact, dealing with some sort of incomplete corrective move. And let me just get rid of this quickly, clear things up a little bit. I've said this now for a long time, is that I'm viewing this as a corrective move. Previously, potentially just some sort of an A, a B, a C, or the A was here, B there. I went into quite a lot of detail in some new analysis that I did. I'm going to be showing you that now. Potential correction now here, and then price is getting ready to move higher. That being said, from these lows, after this massive expanding triangle that ended in, what was this? 2020. See, it was a massive expanding triangle. The same move to the upside. Let's now looking at the September contract. I know the continuous contract will probably look a little bit different, but it's pretty much the same. Is that the ES only really pulled back to the 38.2 retracement level. It's quite a shallow retracement for such a strong move to the upside. That being said, price breaks lower again. Probably going to see price target the 50% or even lower at 3,000 or 61.8% retracement level. So we should know if this is potentially a scenario where price is going to move lower if price breaks that invalidation level, in my opinion. Unless that other count was that we have a fifth wave and now we're going to muck around here for a while and then slowly go up. But I've got a sneaky feeling that we might have to prepare ourselves for potential more pain, like Powell said. raising the interest rates more aggressively, or keep on raising them, not slowing down, probably cause more economic pain in the short term, potentially even long term. And we've been seeing these things in the markets, how they react to anything that's related to inflation at the moment. So what is the alternative here? The alternative I have here, and I've been breaking my head, and you probably, if you've been watching my videos, I'm told you before that I'm very worried that whatever this was is similar to what happened over here. Sort of like a mimic behavior. See, price made a low, moved up, made a low again, couldn't fall further, then moved to the upside and some sort of a three-wave looking move, right? So I was worried that this entire move here, similar to that move over here. And I'm sticking with that interpretation, because quite often you'll see patterns repeat on a regular basis, especially if you follow elite wave corrections, etc. So assuming that this could still be a corrective move to the downside, and that this was not just some sort of an ABC, then my next go-to pattern is a little bit more complex than an ABC. And ABCs, let's say in this case, in a bearish counter trend corrective, and you'll have an A, a B, a C, and three waves connected by some sort of a third wave, or sorry, WX wave it's called, then another three waves to the downside. So it's basically, come on, what's happening here now? Three moves connected by a WX wave, as we call it, followed by another single zigzag. Then it completes, and then you get a move to the upside. So I think this interpretation is potentially what could be going on here. And again, we'll only really know if price breaks this 3,950 level. And if it really starts dumping from there, then even more so. I think we can then have to get our lower target levels sorted out so we could potentially take shorts here. So if that wasn't ABC, this is what I've got it labeled as. And I've actually got another chart open here, and I spend quite a bit of time today labeling that out. So I'm going to try to do it here as best I can with that silly little tool. That this was an A, expanded flat B, and a C. Then we had this same sort of scenario, up, down, up, or up, just breaks the lows, up again, test these lower highs. Similar behavior. But in this case, this was an ABC, and this looks like an expanded flat to me. It really does, similar to what happened over here. Then this potentially was A, B, C, or W wave. Let me just get my ducks in a row, yeah? And this potential expanded flat over here was the X wave. So the entire move here could have been a WX axis. That makes sense. Meaning that this could also potentially be then the start of the final, the second A, B, and C. Come on, man. Something like that. A, B, C. I'm going to actually lose it with that bloody stupid tool. I.e., something like this. That makes sense. Now, this could turn quite nasty. It would mean that these lows in June potentially get tested. W actually there. And that price could actually decline. I think I've had extensions as low as the 3,200, maybe even this lower 50% dash median line. And this line will obviously change as time goes by, sorry, around about 3,000 to 3,200. Here's a few things or repetitions within these moves to the downside. If you look at this high to this low, because I was saying this is an A, expanded flat B, and that was a C. Price pulled into 61.8, nearly made it 78.6. Strong decline. Similar thing here. And in this case, you would go to the C wave, because this is actually corrective potentially in my view. All right, potentially. Again, it's just my own opinion. You won't go to this low here. You can do that though. I think it's actually reached 78.6 if you did that. Nope. Perfectly reached 61.8 within that zone, the resistance zone that we identified previously. Another thing that happened over here, if you can remember, was these time extensions. From the start to the completion of this one, 261.8 to 2 times 61.8 golden ratio, obviously on the extension side of things. What else did we look at previously? I think we looked at this decline here. Extended that to that high. Within 1 bar, 261.8. So we have a lot of golden ratios coming together from a timing perspective, as well as retracement perspective. We had these median lines where we had one sloping downwards, one moving upwards. They all came together right there and price declined. Again, not to say this is that interpretation, but we have an A, expanded flat B, C, expanded flat X, and now we might have mimicking what's happened over here. Sorry guys, my throat's quite dry today. Something like this. It's going to get continuously volatile and probably scare the hell out of everyone again. I've talks about the bear market returning, recession, all that sort of stuff. Well, no, they've already been saying we're in recession, whatever the case might be, but yeah, it is what it is. From a charting perspective, a technical analysis perspective, then I think this is a real possibility, but we'll entertain that if the 3,950 level gets broken. Okay. Let's quickly look at where price might move down into if that becomes a reality. If this was the start of an A, a B, a C, and your secondary A, B, C is going to form here, then quite often it would at a minimum travel, not always, but you know, we also just want to have some sort of repetitive behavior that can be measured and that you studied previously. Then your ABC here could pull into at least the 100% or the same sort of range than this drop to the downside, or even lower. So it's going to be really interesting to see, perhaps even this week, if this 3,950 line in the sand to keep this bullish interpretation, forget about the WX now, that previous interpretation of 1, 2, 3, 4, 5, to keep that alive, it's very close to invalidating that. Now, lastly, before you move on to the NQ, there's another bearish alternative, but this is more like doomsday scenario stuff. So I don't want to be scaring anyone here, but you know, it is definitely also a possibility. And that, what I mean by doomsday stuff is that it will spell pretty disastrous consequences for the S&P, the NASDAQ, the ES, meaning that if we follow what patterns typically do, then if this was a very important high, let me just get rid of this WXY. Actually, should have put the Y here. It should be WXY down here, that extensions I've shown you. Then the other interpretation, and I'll quickly tell you, let me just get that ray again, is either they're using those, I could use those, doesn't matter. But this entire thing, these three wave behaviors, 1, 2, 3, 1, 2, 3, sharp up, 1, 2, 3, could be moving towards the same sort of levels I said before, but could be a leading diagonal. 1, 2, 3, 4. With the fifth wave coming down to this lower trend line over here. When, where, who knows? Could take longer, could be same angle as these previous ones, whatever the case might be. So, why does it say E? It should be 1, 2, 3, 4, 5. The problem with this is it will be like an expanding leading diagonal, which would mean that if this turns out to be right, and we won't know this until we get some sort of retracement that fails to break the all-time highs and we get another strong decline. It's just, this is also a potential pattern. Is that, let's say we do get that sort of behavior, we retrace part of this entire move to the downside in some sort of zigzag. Let's say up to here, and then we get an impulsive third, fourth, fifth, and I have to really crunch the chart up here. Which means that you could potentially get an impulsive third wave. That'll be a very strong extension of this initial drop to the downside. Again, I'm just thumb sucking where ranges could be, but I'm just trying to show you the magnitude that this potentially could be, either 138 or 161 for a third wave. After the initial first wave decline, then a fourth, and then a fifth. And you can see at where we are here with prices at the moment. It would mean that the ES, NQ, and the Dow Jones are going to get completely annihilated. You might not agree with me on that. That's perfectly fine. Like I said, I have to be careful of what I'm trying to show here, but you're also trying to prepare people for the worst case scenario. Not that I'm a closet bear, some people would call it, but let's say for the moment being, potentially the ES could move higher. But if it doesn't, then I still think this whole thing is just going to be a long-lasting corrective move where we could see another ABC to the downside. But we'll entertain that in case the 3,950 level gets broken and we see an increase in momentum, or there's already been an increase in momentum, but continuous increase in momentum to the downside. All right, guys, you got any questions about this, then please let me know before I move on to the NQ. So again, guys, from a trading perspective, I'm a bit hesitant to go long here. Potentially on a day trading environment, you potentially from this zone might get a nice little bounce today to the upside, maybe leading into Friday. But yeah, again, just be careful. This level gets broken, could spell danger, and that alternative scenario could become a reality. Okay, that's it for the ES today. NQ is going to look obviously very similar. Oh, by the way, I didn't show on the ES, we don't have any momentum divergence at these current lows using our MACD divergence indicator. This is a picture perfect example of where we had momentum divergence at a high, the bearish momentum divergence. We also had the zone that we said price might move downwards from. There was also a pitchfork sloping to the downside, one that we've had on our previous videos. So please go watch those previous videos if you don't know what I'm talking about. In any case, price reversed from that area. Again, similar structure to the ES, but here, look what happened. Price reached the invalidation zone. Oh gosh, why are we lagging again? Just give me 1 second. There's always the NQ, and I can't figure out why. Anyway, bear with me. We'll see if we can get things sorted out here again. Saying similar thing, 1, although this looks like a ABC 2. And then we said either, and this counts as a beautiful 5-wave move, 3, and we expected a 4th wave to end within this region. It didn't. Price initially reacted to the upside, and then same thing that happened to the ES. Bam, straight to the downside. So this can't be, in my opinion, a fourth wave. At least we're seeing some sort of leading diagonal, which is also a possibility. But yeah, it's not looking good. That's all I really want to say. Just get that line sorted out properly. Let's go back to, yeah, 12,262. Yesterday's low on the daily. Tested that. 12,247. Again, you know, we might get a bounce to the upside. But these levels been broken, right? Have to remove them quick. So not looking good, right? Very, 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 very strong decline. Unless, again, I made some sort of, I don't know, mistake here, which is something I can do quite often. That's pretty natural when it comes to trading. Is that this was some sort of a 1, 2, 3, 4, 5, and this is just a sharp corrective move, which is now currently on the NQ. Let me just get rid of those divergences quickly. Only retraced just above the 61.8. You're already seeing the NQ trying to move higher. Both the ES and the NQ still in yesterday's trading ranges. So difficult to say. Same sort of chart structure, although on the NQ it's reached, i.e. breached that invalidation zone. An upward move, not impossible, but a continuation lower. I think we're going to see a similar sort of behavior that we've, or that I've just mentioned, that might appear on the bearish alternative counter I've just shown you on the ES. Okay, I want to get out of NQ because it's lagging. Again, how are we doing for time? Let's look at crude oil and then gold, and we'll finish today's session. I know, guys, very messy chart, right? All these horizontal lines were previous lines we looked at as potential resistance. I think Monday we said that price should hold this level, which was just slightly below the centi-median line of this pitchfork sloping to the downside. It just fell short of it. So it didn't break that. We had this little support area over here, and I should actually make that green. Red for resistance, green for support. Always nice to see it like that. And boom, straight down again, guys. Geez, look, very messy. Crude oil. My thinking still is, if we get a close below this zone, that I think we'll then finally see price reach the April lows, which is at 84.48, and the March lows at 83.65. It's pretty clear to see that there's a bit of a large sort of zone that's been acting as support. If you look at double bottoms, triple bottoms, those sort of patterns, you don't really get 4 bottom patterns, if it makes sense. We quite often have a 3 bottom or triple top or triple bottom, sorry, not 3 bottom. One could argue 2, 3. I think if price breaks this level and can close below this on a daily, below the 88.52 level, that we'll potentially then finally see a break of the 84.48 and 83.65 area. Potentially continuation towards this lower median line, which again roughly lies here at 79.81. And below this, we have these blue upward sloping channels that contain price extremely well all the way to the upside, since prices were negative in April, almost 2020. I'm getting confused with these days or dates or the years, to pardon me, but anyway, it went negative. We should all know that it could potentially move into that area. And what's really interesting here is this recent move really nearly pulled into the intermediate line. It still tells me that although price is up and down, it's sort of still grinding its way slowly lower. So yeah, let's see what happens on crude oil. Again, those levels, I think the bottom side of that level 80 or some of the support zone at 88.52. If that gets broken, then and closes on a daily, I think that's good indication that it will proceed lower. I've got a question here from Miguel. Is it Miguel Ortiz? So do we expect a move up today? Both the ES and the NQ, I think there's a possibility that we'll see a bounce, but I'll be very cautious to the upside. We've just shown you, Miguel, on the NQ that a bullish invalidation count of mine has already been invalidated. So ES, on the other hand, I'll quickly show you that again. Slightly above that invalidation level. It is slightly bouncing a little bit higher. There's a little bit of a support zone that we have here. Will it continue? Will it fail? Like I said, it's really difficult to say. I wouldn't be surprised if we get a strong bounce, similar to what potentially happened over here. And I won't say strong, it could just be a retracement and perhaps back into these previous lows that happened over here. But in rejection and followed by short sell-off, if it eventually goes below 3,950, then I'm going to start looking for shorts and then follow the projection I showed you on in the bigger scheme of things, that WXY pattern. All right, and then gold. How are we doing for time? Okay, we're still doing well there. Same thing with gold. We've had bullish divergence at these lows that were set in July. We had a strong move to the upside. We actually overshot, and the center median line of this pitchfork sloping to the downside here. All right. Sign that. But it overshot at the same distance as where this one overshot that pulled into this center median line of the much larger pitchfork that we drew over here. Gold proceeded much stronger and lower. We had a support zone. It was like our last sort of area that we thought support might step in. It didn't happen. Price sliced below that. And it does currently look like gold could be making its way to, let me just get my horizontal labeling line out again, to potentially test these lows at 1696. I say potentially. Let's get rid of this line. So you see how well price has been respecting these lines to the downside as well. Right below this current candle is this low median line. Price nearly reached that, so might find support there, but it's very close to these previous lows of set in July, right? So support maybe at 1717. Maybe if you're still trading to the downside, if you do trade gold, that might be a target, but be careful, you might have support step in around about that area. But with price being so near to these previous lows, I wouldn't be surprised if it just continues lower and slices lower than the 1696.5 level. That being said, I still feel in the bigger picture that this is all corrective. But yeah, let's have another look at gold on Friday when we do our final analysis session for this week. It will be the start of September the 2nd already. And see how markets react when those job numbers get released. So I hope you understand what I've been trying to show you guys on the ES and the NQ, just to, you know, if there is a bearish play, then we do have that planned. And if that does become a reality, then, you know, markets can move quite fast to the downside, as we've been seeing this entire year. So it could be some decent setups appear there from both a swing trading perspective. maybe even day trading if you trade the smaller time frames. So just be aware of those levels. Again, on the ES, might get that bounce, but now I've seen the NQ invalidating that level. Just be careful. All right, very, very close to getting to that bearish alternative counts that I've been showing you. All right, guys, thanks so much for watching. If there are any other questions, please let me know. Otherwise, we'll stop it right here, and I'll get to work with uploading the video quickly, and I'll be back again on Friday. See, I've got a Q&A here. David, thank you. No worries, David. Thank you very much. Again, guys, thanks very much for watching. I'm going to call it quits for here today. And like I said, I'll be back on Friday. Take care and have a good one. Cheers. Goodbye.